In a week filled with economic warnings and growing global tensions, one key development stands out. The European Central Bank has announced that consumer inflation expectations across the Eurozone are at their highest level in almost a year. As prices continue to pinch wallets and monetary policy hangs in the balance, this revelation has triggered fresh debate over Europe's economic trajectory. What does this mean for everyday citizens, investors, and policymakers? Is the ECB on the verge of new action, or are we looking at a prolonged period of instability? Let's break down the numbers, understand what's causing the shift in expectations, and explore how Europe and the world may respond. The ECB's Consumer Expectations Survey for March 2025 shows a marked increase in how households expect inflation to behave over the next 12 months. The median forecast among respondents was 2.9%, the highest figure since April 2024. Even longer-term projections for 3 years ahead crept up to 2.5%, again trending above the central bank's 2% target. This report, which includes data from more than 19,000 individuals across key Eurozone economies including Germany, France, Italy, and Spain, is a critical tool used by policymakers to gauge how public sentiment may shape future economic behavior. Central banks consider consumer expectations vital. When people expect prices to rise, they tend to buy more now, accelerating actual inflation. Beyond inflation, the survey also showed that expectations for economic growth over the next 12 months are becoming increasingly pessimistic, now standing at negative 1.3%. At the same time, fears about job losses and decreased purchasing power have grown. Several key factors are pushing inflation expectations higher. 1. Energy prices. Although Europe has avoided the worst-case energy scenarios feared in 2022 to 2023, gas and electricity prices remain volatile. The energy crisis sparked by geopolitical tensions, especially in Ukraine and the Middle East, continues to cast a shadow over long-term price stability. 2. Food costs. Rising costs of essential food items have played a significant role in shaping consumer perceptions. Input costs for agriculture, including fuel, fertilizers, and labor, have pushed prices higher across the supply chain. 3. Global trade instability. The ongoing trade war between the United States and China has had knock-on effects across Europe. Tariffs and disrupted supply chains are driving costs upward for manufacturers and importers, who pass those costs on to consumers. Wage pressures. With workers demanding higher wages to keep up with rising living costs, many companies are responding with pay hikes. But this too feeds inflation, creating a wage price spiral. 5. Housing and rent. In major European cities, rent inflation has been particularly aggressive. High demand, low supply, and increased interest rates have all contributed to elevated housing costs, a major pain point for urban residents. In response to these mounting concerns, the ECB cut interest rates in April 2025 for the first time in more than a year. It was a bold move considering that inflation is still hovering above the 2% target, but the central bank appears more concerned now about deteriorating growth than about temporarily high inflation. Peter Casimir, a key ECB policymaker, stated this week that the bank expects to meet its inflation target within the coming months, rather than in early 2026 as previously projected. This shift reflects increased confidence in the effectiveness of previous rate hikes in 2023 to 2024, but also an acknowledgement of the fragile economic situation across the bloc. ECB President Christine Lagarde has reiterated the bank's dual mandate to stabilize prices while supporting economic growth. However, some economists argue that the ECB has been too slow to act, allowing inflation expectations to become entrenched. There's also tension within the governing council. While some members advocate more aggressive easing to stimulate growth, others worry that premature rate cuts could reignite inflation. For ordinary citizens, rising inflation expectations are more than just numbers. They're lived realities. According to the ECB's survey, expectations for nominal household spending rose to 3.5%, the highest in a year. That suggests that households are planning to spend more, either in anticipation of higher future prices or due to a need to cover rising costs. Yet at the same time, the number of people expecting their incomes to fall has also increased. Consumer confidence has dipped, particularly in southern European economies like Italy and Greece, where the effects of inflation are being felt most acutely. Retailers report mixed signals. While essential goods sales remain stable or rising, discretionary spending, such as travel, luxury, and electronics, is starting to soften. This duality reflects a cautious optimism. Consumers are adjusting, but the road ahead remains uncertain. There's also growing political pressure. Several EU governments are exploring temporary tax breaks, subsidies, or price caps to shield vulnerable populations. But these measures, if overused, risk distorting the market further. The implications implications of rising inflation expectations are far-reaching. Investment uncertainty. Businesses may delay investment if they fear higher future costs or weaken consumer demand. This could undermine productivity and employment. 2. Currency fluctuations. If the ECB continues cutting rates while the US Federal Reserve maintains or even raises rates, the euro could weaken, making imports more expensive and contributing further to inflation. Government debt. Higher inflation often benefits governments by reducing the real value of debt. However, it can also force higher interest rates on new borrowing, complicating fiscal plans. Social unrest risks. Rising prices, especially on essentials like food and housing, can fuel political discontent. With elections looming in several European countries, inflation is likely to be a hot-button issue in the months ahead. The ECB's revelation that consumer inflation expectations have surged to a near one-year high is more than a statistical blip. It's a flashing warning sign. Europe stands at a crossroads, facing competing pressures of high prices and slowing growth. Whether the central bank can thread the needle of monetary policy without tipping the economy into recession remains to be seen. One thing is clear: the path ahead is uncertain, and both policymakers and citizens will need to navigate it carefully. For more in-depth analyses and updates on economic developments, subscribe to our channel, Sphere Insiders.